First of all, are you BG1 or BG2? It was really bothering
Well,
me.
I mean, like, Bill Gurley is a lot bigger. Let's call him BG1.
I was going to say you're BG1 for us tonight, so thank you. Headline is, you are going to the White House on Monday.
Yeah.
This is a big deal for you, something that you've been working on for 4 years.
Yeah.
Something that you proposed is going to be in the tax bill, and it all has to do with giving kids financial flexibility.
Yeah.
So-called, they're now being called Trump accounts. I don't know how you feel about that. But the idea is that every kid born in the United States will get $1,000 that they can't touch.
Can't touch.
Until they're 18, and that will grow. Can you explain
So it's called,
it to us?
So first, great to be here. The piece of legislation is called the Invest America Act. It's a big bipartisan piece of legislation in both the House and the Senate that got incorporated into the reconciliation bill. And the reconciliation bill is really a vehicle for pulling in underlying budget-related pieces of legislation. It's a fast track. So it's a filibuster workaround in the Senate for passing budget-related items. I've been working on this for 4 years. You heard Sundar earlier tonight talk about the need to evolve the social safety net, the social contract in the age of AI. And this idea was very simple, right? We need to move to an ownership society. 70% of people don't participate in the upside of America. They don't have accounts that compound. They feel left out. They feel left behind. Less than half of people under the age of 40 have a favorable view of capitalism. So the answer was pretty straightforward. Let's make them all capitalists from birth. So when they get their Social Security account, they will now get an investment account, privately owned, assigned to them, seeded with $1,000 from the Treasury. So the total cost of this, 3.7 million kids born a year, $1,000 each kid, $3.7 billion. Just to contextualize that, that's about the cost of a single Patriot missile battery. In Washington, they call this budget dust. It doesn't even register to give every kid in America a private account from birth. But the exciting thing that we'll be talking about Monday at the White House with many CEOs and all the leaders of the House and the Senate is it's really a 401k from birth. We're going to have announcements where the CEOs will say, we will add to the accounts of the kids of our employees. So it's going to represent millions of employees in America who will, the companies will add to those accounts. We're going to have philanthropists that are going to talk about multi-billion-dollar contributions, not to a charity, but directly into these kids' accounts so it can compound for their lifetime. If you start with $1,000, you add $750 a year. Moms and dads Venmoing in 10s and 20s, grandparents' birthday money, companies adding money, philanthropists adding money. If we do this, $750 a year, it's $50,000 at age 18 when they can first touch it, but they see it on their phone. They own a little bit of Dell, a little bit of Microsoft, a little bit of Berkshire Hathaway, a little bit of United Airlines, the S&P 500, the 500 best companies in America. At age 30, it's $175,000. And if you don't touch it at age 50, it's $1 million. It gives hope to the 70% of people right now who say, you know what, this system's not working for me. It's rigged against me. It's the coastal elites that are doing it. You know, I'm from rural Indiana, and when COVID hit, right, a lot of my friends from high school lost their jobs. There were a lot of layoffs across the country. But what did really well? The market did really well. And that was the first time I talked about it. In October 21, I said, this period of time has worked really well for the investment class, but it hasn't worked really well for the rest of America. This gets the rest of America into the game. So whatever you think about the reconciliation bill, whatever you think about, whatever your politics are, I hope that everybody can get behind this because it's a big bipartisan effort in Washington.
So on that note, I'm curious what you think about the perception of an emerging rift between Elon Musk and President Trump. Elon did call this bill a disgusting abomination.
He did.
What do you think about that?
Well, as you know, I'm a big fan of Elon and friends. And I think that, and I also believe and have fought for 30 years over the fact that we need some sort of balanced budget amendment in the country. Like I do think it's immoral to pass on $50 trillion of debt. I was just with my 14-year-old, that's why I was a little late, who has a musical tonight. And you know, it's unconscionable that we live a higher standard of living today by borrowing on a credit card that's going to come due on their watch. you know, and so I think we have to get it under control. Ray Dalio has talked about a plan, 3-3-3, 3% growth, getting our debt to GDP ratio to 3% and keeping inflation under 3%. Scott Bessent has subscribed to the 3-3-3 plan. You can't do it all in a year. Right? When Elon came on board, listen, nobody was more excited to think we could cut $2 trillion in 1 year. The problem is every $300 billion you cut is a 1% headwind to GDP. So if you cut $2 trillion in a single year, you have negative 7% GDP, right? It would throw us into a recession. And we know the second you have that negative growth, now the revenues to the government don't go up, they go down. It's called the Laffer curve, right? So, you know, I think it's really important that we follow his subscription, which is find our way to a balanced budget. I think it needs to be a 4 or 5 year plan laid out by this administration. I would like to think it could happen faster. There is a rescission bill. So the rescission bill is what the administration has now sent to the House to say all these spending items are stupid. Elon found them with Doge. You need to repeal them so that we can take them out of future budgets. That will get passed, I believe, and it would be ridiculous for us not to pass, I think, the rescission bill. So, listen, what I love about Elon, he's first principles. He's brought, you know, he's an incredible driving force in this country. I love the fact that he was in D.C. and he speaks his mind, and I imagine the president's going to speak his mind as well, which is, I think, on balance, this bill is the best we can do right now. Maybe the Senate can make some further tweaks, cut some of the costs, but either way, we need to get on this path to 3-3-3.
You do a lot of representing of Silicon Valley inside the Beltway. You've been to Mar-a-Lago. What grade would you give Trump so far on tech? And obviously, tariffs impact tech.
Yeah. Well, let me just talk specifically about tariffs and AI diffusion, which I think is really important to everybody in this room. I went on CNBC, I think mid-April, end of April, and I said, the president has fielded a team of rivals within the White House. It's like The Apprentice. Door one was nuclear Navarro. $2 trillion of tariffs, get rid of the Internal Revenue Service, and we're going to replace it all with tariff revenue. We're going to go back to the time of William McKinley in 1886. Door two was, I call, fair trade Bessent. We're going to have 10% across the board tariffs. It'll generate a couple $100 billion in tariff revenue, and we're going to re-onshore critical industries, you know, like chip manufacturing, precision manufacturing, you know, some medical supplies. I said, if the president goes with door one, nuclear Navarro, I'm out. It's bad for the U.S. It's bad for the country. It's not going to move us forward. It's going to alienate our allies around the world. But I thought Navarro brought an important set of arguments to the table, but I'm glad the president has gone with Bessent. Bessent has been front and center on all the Sunday shows. He's negotiating the China deal. I think we are going to land the plane on tariffs and end up in net a better spot.
But how's that going to impact the AI arms race with China?
Yeah, so listen, we were on a horrific course in terms of what has been called the Biden AI Diffusion bill. So this was a piece of legislation, not a legislation, it was a rule made by the Commerce Department under Biden, which created a complex set of rules and regulations that NVIDIA had to jump through, or anybody had to jump through if they wanted to have any chips or any models outside the United States. Right? So you had Sundar on earlier. It's the equivalent of requiring Google in 2002 to say, oh my God, this search is so dangerous that we're not going to allow you to go to any other country until you come to Washington, get on bended knee, ask us whether or not you can launch Google in India, and then we'll have some bureaucrats make a decision as to whether or not that's safe. That would be a terrible decision for Google in the age of internet. We ended up running the table globally in internet. And if we're going to win the AI race with China, we needed to do exactly what we did. We, under the leadership of David Sachs, who's the AI czar, the president has repealed the Biden diffusion rule. And you saw the announcements in the Middle East. I will tell you, I was in the Middle East, right? And we say to our allies, AI is existential. It is existential to your national security, to your economic security, to everything about your country. But guess what? We're not going to give it to you, right? We're saying we're not going to give you our chips. We're not going to give you our models. That was a path to ruin. because China's not that far behind, and you would have had the China AI stack literally run the world. Somebody, one of the ministers in Saudi Arabia said to me that Huawei had gone from 0% market share to 40% market share, and they were months away from making the decision to go with the Huawei stack, right? Because they can't be left behind. They have to do something. So it was incredible to see that 180-degree turn. I think we're now on the right path. But the next real debate is the export controls to China. I talked about it on the pod today. We've got a ban on rare earths by China that's going to cause us massive problems in this country. We can't get magnets. We need magnets in almost all the industrial products we produce, certainly in all the electric motors. So now we have car companies that are going to have to shut down because we don't have access to magnets, and China has a monopoly on these because of rare earths. On the flip side, the United States is banning all AI chips into China. And what I said today on the pod is it seems to me the smart trade for the president when he talks to Xi on Friday is, first to land the plane on tariffs, but I would trade rare earths for AI chips, deprecated B30s, which NVIDIA is now producing. Why would I do that? Because the U.S. has to have time to build our critical supply chain when it comes to rare earths and to magnets, and certainly we're going to do that. Secondly, we will generate a lot of revenue for not only NVIDIA, but for, to diminish the trade deficit and tax revenue. It's $40 billion business, NVIDIA in China, to keep them on the CUDA ecosystem rather than allowing them to have a monopoly on the Huawei ecosystem. So I think we need to do that. And then finally, what I would say is when you say to China, AI is existential, but you can't have any of our chips, it forces them into the corner to have to make a move on Taiwan, which would be devastating for the world, devastating, I think, for China, devastating for the U.S. There's no need to do it. We need to get our supply chain out of Taiwan. It's going to take us 4 years to do it. So if we want to pick this fight, rare earths over chips, do it in 4 years. Do not do it now.
So you were early in NVIDIA, which is, you saw that wave coming early. We talked to Sundar a lot about jobs, and I'm curious what you think about Dario Amadei's prediction. 50% of white-collar jobs, 10 to 20% unemployment in 5 years.
Yeah, I think it's nuts. I think Dario's brilliant. He's built something that's really incredible, but I don't know what the motivation is behind the scare tactic. Right, it could be regulatory capture, like I'm out in front, so now shut it down. Remember when Elon suggested a pause for 6 months as well? Those things always, I don't know, the market always wins. And I'm like, let competition, I trust competitors to go out and compete and to win. And, I don't necessarily want an FDA in Washington picking winners and losers in AI at this very, very early stage. I will tell you what we have seen through every single technology epic, every super cycle, starting with computers, mainframe, going to personal computers, desktop, internet, mobile, social, cloud, is it leads to more, right? It's expansionary. Look at the U.S. GDP. It's accelerated. It hasn't decelerated.
So did you believe everything Sundar said? Like the web's only going to get bigger and better, and it's better for publishers.
Well,
and
I would just say this.
People would be more creative and empowered.
It's less about belief, and it's more about studying history as to what has happened, right? Starting in the Industrial Revolution, all these arguments were made, and they didn't come to pass. Our economy ended up massively bigger, and people ended up massively better off. Did everybody end up better off, right? Were blacksmiths better off as a result of the Industrial Revolution? No. But if you look at the jobs today that exist in the world, I'm giving a talk this weekend at my 25th business school reunion on this topic, so I've been doing a little research on it.
Congratulations.
70% of the jobs that exist today did not exist in 1940. Okay? So we have to evolve and we have to expand, right? There's this idea that somehow we can, slow down AI and therefore we will not disrupt things. It has never, ever worked anywhere. It won't work now. It will lead to more abundance. But yes, I also think this is going to be disruption at a rate we have not seen before. Why? Because I told you the curve is steepening, right? So I'll give you an example. If you look at Google, it took them 8 years to get to 1 billion searches per day, right? ChatGPT has gotten there in 2.5 years. Why? because we all have these supercomputers in our pocket. Everybody has complete access. 9 billion of these on the planet today. Do you know how many total mobile phones there were in the year 2001? 200 million, and they were all dumb. Nobody could access the internet on them. So technology diffuses a lot faster. For your enterprise, you have to move faster, or you will be disintermediated faster. Right? Consumers, if they don't make themselves bionic, what am I doing with my 14 and 16-year-old? I'm not saying don't use screens. I'm saying make yourself bionic. Learn how to use this stuff. Learn how to use deep research, right? That's how you're not replaced by this. So I think both can be true. The rate of disruption can be bigger than we saw in prior super cycles, but it can also lead to more abundance. It will not lead to more abundance if we build walls around America and try to keep us from exporting any of this, the nuclear Navarro walls equivalent in technology. That would set us way back. We would lose share to the rest of the world.
So let's see, you've made a lot of money in the public and private markets. What's your view? Where should people be placing their bets, especially when it comes to tech in the public markets? And on the private markets, like, are we in an AI bubble? Like, some of this has to be hype.
Yeah. So we run Altimeter, has about half of our capital in the public markets. I've been doing this now for 20 years. I've been in Silicon Valley for 25. And
how many $1 billion?
A lot, over 10.
Over 10.
No, but on the public side, I would say this, and my kids are now open up their Robinhood accounts and are kind of getting into this, and every kid, once we pass the Invest America Act, every kid in America will be inspired by this type of ownership. But the reality is this is a golden age of margin expansion. I tweeted about it last week. I called it game. What do I mean by game? Well, if you look at the number of job growth out of the Mag 7 over the course of the last 3 years, basically been zero, right? Their margins have expanded dramatically. Why? Because you ask about jobs, Sundar said, well, we'll have a few more people or whatever. We're not going to lay a bunch of people off. May or may not be true. I've talked to other CFOs of other Mag 7 companies who said we could do this with 50% fewer employees in a few years. That leads to regulatory Washington issues, societal issues. So they don't necessarily need to do that, right? They can grow into it. But Jensen Huang was on our podcast, and I asked him the question, and Jensen said, listen, we're going to 3, 4, 5x our company, but the number of employees will only go up by 20 or 30%. So it's not going to keep pace, which means margins are going to expand. So find the leaders in whatever category who won't compete away those incremental margins and buy those. Right? They can be industrial companies that are leaders. They can be healthcare companies that are leaders or technology companies that are leaders. I think this is the age of margin expansion. And then I know we're running out of time.
I know.
So
It's just like...
I'll quickly hit the, I told you we're going to jam a lot in. If I'm going to drive all the way up here, we're going to get after it. So on the private side, I hear a lot of the bubble talk, like you. Like I said, that's kind of the... I'm giving this talk at HBS. Think about when I was there, 1999, 2000. I was there at the peak of the bubble, and I was there when the bubble burst, right? And I was helping to start General Catalyst at the time, a well-known venture capital firm. And, people say, oh, this is just like it was then, right? And we were all out of our mind then, right? So I went back and looked at a few things. Take Amazon. Amazon, in 1999, or in the year 2000, its peak value in the year 2000 was $150. This is not split adjusted. I'll give that to you in a second. It was $150. Henry Blodgett, when it was $150, called Amazon 400, his price target 400. And remember, this man would be ridiculed off Wall Street for making this call, because the stock went from $150 to $20 by the end of the year, right? That's where it crashed. On a split-adjusted basis, okay, where is Amazon today relative to that $150? It's up 200x. Where is it relative to where it was in December of 2020? Up 1,000x.
Yeah.
Okay, so the conclusion for my classmates is we were dreamy-eyed, we were a little bit naive, and we overestimated where the world was going to be in 3 years because it took a long time to get these in everybody's pocket. But we dramatically underestimated where the world was going to be in 20 years. It's way, way bigger than any of us ever dreamed. It's way bigger than Henry Blodgett dreamed, and he was run off Wall Street for it. And I think that's the moment we're living in now. This is a profound moment. The world will look dramatically different in 20 years. It happens slowly, and so you don't think it's so different.
So no bubble. Is that what you're saying?
I would say this. There are certain things that are going to be overvalued. There's going to be creative destruction at this moment in time, just like there was then. But when we look back, I think at OpenAI as an example, the market leaders that emerge are going to be way bigger. They're going to be way bigger than the winners in the internet. Why? Because when you get machines to think for you, they're no longer just dumb calculators giving you blue links, right? When they actually give you answers and start doing things for you and booking the hotel for you, right? And answering questions for you and being tutors and being therapists and doing all this, the value is immense, right? I'll leave you with this because I know we really have to go. Back in 2000, technology represented about 3% of the global GDP. Today, it represents about 15% of global GDP, right? Global GDP is over $100 trillion. So I ask you, when we're sitting here in 10 years, is technology as a percentage of global GDP still going to be 15%, or is it going to be more? It's going to be a lot more. I don't know how much more, right? Maybe 20%, maybe 25%, maybe 30%. I would argue it's accelerating. Its penetration and importance is accelerating. You cannot be an automotive company today without being a software, AI, and self-driving company. You're going to be totally disintermediated, and it's both exciting, but it's exhausting. It's scary, even for those of us who sit. Like I said to a good friend the other day, like this is the moment where you're like, ignorance is bliss. Like there is a weight and a responsibility. I interact with Sam or Jensen Huang or all these guys. There is a weight and a responsibility of this moment that I think is bigger and weightier than any moment we've lived through. But, listen, this place is an amazing country. I think we have the best system on the planet. We will evolve our way through it. And I think we're going to come out way better on the other side.
All right. Well, you said you would bring the spice, and I think you did. So thank you, Brad. BG1, don't tell BG2 that we said that.
Thank you.
Thank you.
Thank you.
Thank you.